Hey, do you want to work until you die and never become a millionaire? If not, you'll need to start making money while you sleep, and I'm going to show you how easily you can do this with the power of investing. Hey, what's up? I'm Russ, a welder who's passionate about passive income, and this is not financial advice, but a funtertainment video on what I would like my two teenage daughters to do. Now, investing is a lot more complicated than it sounds. All it is just putting money into something now to get back more money later. And why should you care about investing? Well, it's your ticket to being a financially free millionaire able to live life on your terms. And you want to know what the secret sauce is? Live on at least 90% of what you make. So here's the deal. Pay yourself first and get money to invest with by stashing away at least 10% of every dollar that you make. Treat that dollar like it's only 90 cents because that extra 10 cents is your ticket to becoming a millionaire. And if you can save 20% or 30%, you will become a millionaire even quicker. I need you to know that there is a big bad wolf that you absolutely must avoid. High interest debt. Credit cards have sweet rewards, but they're also debt in disguise. So don't let those crazy interest rates sneak up on you like paying 23% on revolving balances. Pay that card down to zero every single month, or else it's going to be really hard to get ahead in life when you have to pay 23% interest. So we're avoiding debt, right? But now, how are we going to turn a dollar into more dollars? It's time to dip our toes into the stock market, which is kind of like a shopping mall where you can buy a slice of any business. But don't stress about picking the right one, because with something called an exchange traded fund, also known as an ETF, you can buy the entire shopping mall and all of the stores in it. And the simple way is with an ETF called the Vanguard Total Stock Market Index Fund, ticker VTI. It's a one-stop shop for owning a piece of almost 3,800 publicly traded United States businesses. But you don't have to take my word for it. Listen to one of the greatest investors of all time, Warren Buffett.
In terms of the index fund, I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time. If I were going to put money into a index fund in relatively equal amounts over a 20 or 30 year period, I would pick a fund. And I know Vanguard has very low costs. I'm sure there are a whole bunch of others that do. I just haven't looked at the field. But I would be very careful about the costs involved, because all they're doing for you is buying that index. I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs attached to them. So I would pick a broad index, but I wouldn't toss a chunk in at any one time. I would do it over a period of time, because the very nature of index funds is that you are saying, I think America's business is going to do well over, or reasonably well over, a long period of time, but I don't know enough to pick the winners, and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time. If you're a young person and you intend to save a portion of your income over time, I just say just pick out a very broad index, and I would probably use the S&P 500, because I think if you start getting beyond that, you start to think you should be in small caps this time and large caps that time, or this foreign side. And as soon as you do that, you're in a game you don't know, you're not equipped to play.
I hope you caught how Warren emphasized low cost. Well, VTI, our ETF that we're going to buy, has a 0.03% expense ratio, which means for every $100 invested into VTI, it'll cost 3 cents a year, which is criminally low. So we're going to invest into VTI, but where do we keep that investment? Well, we're going to keep it inside of a Roth individual retirement account. And in the USA, this is an account that belongs only to you. Hence the name Individual Retirement Account, or IRA. And you can open one once you start earning income. And your investment, specifically in the Roth IRA, will grow tax-free forever. forever. And the earlier you start, the less effort it is going to take to become a millionaire. And I mean early, like 18 early. Check this out. The average annual United States stock market return is about 10%. So if you start with $1,000 a month when you're 18 and add just $205 a month, by the time you're 55 years old, you should have a portfolio value of just over $1 million, with 91% of that being interest earned. There's a study that shows no matter when you jump into the stock market, after 20 years, you would never have lost money. So don't freak out when things get a little bit rocky. And remember, the stock market can feel a bit like a roller coaster, but you're in it for the long haul. And over its lifetime, it's always gone up and to the right. And I never want you to forget that when the market feels worst, when everything looks terrible, this is exactly when you should be buying more. Check it. Over the last 30 years, if you missed the 10 best days in the stock market, you'd have 54% less money. And 52% of those best days happened when the stock market was down in the dumps of a bear market. And there's an old saying that I want you to remember: time in the market beats timing the market. Now back to that Roth IRA. Opening one is really easy to do, and I'm going to show you how using Fidelity Investments, which has been in business since 1946. And then we're going to set up automatic deposits from a checking account and how to buy VTI automatically every week. Log in if you have a Fidelity account. If not, open an account, then click Open Roth IRA. We are currently not a Fidelity customer, so we're going to hit no and then next. Then you'll just answer the very basic details about you and where you live, answer the employment question, and then most of these security industry regulations will likely not apply to you. Review your personal information, scroll down to the bottom and click Open an Account. And there you have it. You got an open account. You've got an account number. Make sure to save that. All self-explanatory here. Just create your username and password and security question. And now we got to add money to the account so we can start investing. So this one, choose whichever most is appropriate. We're going to do link a bank account. Obviously, follow the on-screen instructions. They'll send you the security codes. You put all that in. You're smart. You know what to do. And now you're going to have to link your bank once that's all done. So check the appropriate boxes. This one is going to be for ourselves. We're going to use Plaid to log in here. Follow the instructions with your phone number. This is going to hook up to your bank account and do it the quickest way. So make sure to pick which bank is yours. And then you have to enter your bank login information. And when that's done, then you have to verify your identity. Almost there. Follow the on-screen instructions as you saw right here. Select the account you want the money to pull from. We're going to use our checking account for this one. And then it'll take a minute to link your account here. We're successful. We've linked the account, so we can now add money to our Roth IRA. Hit transfer money. We're going to pick where you want it to transfer from. Checking account going into the Roth, and we're going to set this up as a one-time deposit. Move $50 to get in there right now, so you'll see that confirmation all done, and you've submitted the transfer request. Now it'll show up in your account while it's taking time to move from your bank, but they give you the money, so you got it in your account to do what you want. Thing I want you to do here is to set up new account, is to name your beneficiaries. This is really important because if something should happen to you, if you were to expire, who do you want the money in there to go to? Hopefully you're going to have a lot. You're going to have a primary right here, which is the first person that it will go to if you die. And then if they happen to be gone, who will the money go to after them? And then here we're going to place our first trade. And you're going to pick VTI or whatever you want. In our instance, I want you to use VTI. That's the total stock market fund as we talked about. You're going to hit buy, and we're going to do it in dollars. Now, this is how you would do it because you're doing $50. It's a fractional share of 234. Now, you can't do it because the market is not open, so you can only do dollar amounts if the market is open. And then the next time the stock market was open, we actually did get that bought in our account automatically for us. As you see here on the screen inside of our Roth, we got VTI. We have almost a quarter of a share, that fractional purchase, just under $50 cost basis. Now we're going to set up a recurring activity. So what we want to do is to have this become automatic. So we're going to pick stocks ETFs, go into our Roth IRA. What symbol do you want to buy? We're going to have VTI. We're going to do $50. We're going to set this up for a week, just $50 into VTI every week. Fractional, easy money. We're going to choose Friday, whichever one you'd like to do. And we're going to have it start on Christmas, December 25th, 2023. And use our linked bank account is where the money's going to pull from every single Friday until we cancel it. We'll confirm it. And there we go. We got that one scheduled and done. As you can see right here on the screen, you can delete it, edit it, whatever you want to do, pause it. But now we're going to do a money transfer. So we're going to transfer money in to be able to buy VTI. So we're going to select where we want it to go to is the Roth. We're going to do a weekly, every Friday, $50, and just click continue, submit. Simple as that. There you go. They're showing you that it's locked in, and that's it on our way to becoming automatic millionaires. So the 4 simple but not easy steps to become an automatic millionaire that I want you to follow are: underspend your income by paying yourself first, no matter how much your income grows. Stay out of high interest consumer debt. Automatically buy the entire US stock market every week or month, and do not sell. And lastly, do not touch that money until you are in your 60s. This is the super simple, easy way for you to become a millionaire without having to do any stock market research and have millions of people working for you 24/7, 365 to make you a millionaire. I'd really like to know your favorite investment that you're using to become a millionaire. And if this video is helpful, plumb the thumb. And in this floating little box next to my head, check out an interview I had with a listener who is a millionaire. And if you do that, we will talk to you there.